Trenders Saturday, 3/12/22. Welcome. If you're new here, go down to that bottom right hand corner, hit that option center logo, and subscribe. Today we're going to go through SPX on multiple time frames, really dig in and hit that Elliott wave and other technical analysis indicators. So I call it, is the end near? Is this correction over? Are we going to go much, much lower? Or perhaps we can eke our way just a little bit higher. All right, let's see. So we have SPX on the monthly time frame. You see this last channel here, this is a primary wave 5. We have intermediate 1, 2, 3, 4, and possibly the N5 here. And I do suspect that we might have something like this where we correct and finish off our wave 5 a little bit higher. So that's the kind of things that we'll have to check out right now. And one of the things that typically happens at the end of a move is you have divergence. We don't have any divergence here. We do have a little bit in the RSI, but the MACD, perhaps price inches its way just a little bit higher, and on the monthly time frame, that's 5,000 plus points. To the 5,000 area, that's possibly 1,000 points up from here. But as it makes higher prices, we'll make lower highs in this higher highs in price, lower highs in the MACD. That's what I'm trying to say. So I'll probably end up making one of these little lines here while price makes a lower high. So we'll keep that in mind. It looks like the RSI is coming down to if you notice the histograms, we started red. That's kind of a bear indicator. It's a possibility that we now make our descent. But if you notice, the histograms don't make it very far before starting to head back up. Can that happen one more time? That's what we're trying to find out. So we're down to that 25 area on the MACD histogram. On the RSI, we're coming down to the 50 area where perhaps we get some support, and keep that in mind as we go throughout this analysis. All right, let's go down to the weekly time frame. On the weekly, so we have this, if you notice this rising pivot, we moved it down where all these points could hit, and that's where we made a nice bounce. Now, I'm actually going to move that to its original spot that I had it at before and just make some sort of assumption right now that we may come down to that area. So if we bring it down there, we have a point here, 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 multiple times in here, and then we'll see what happens in this area at this point. So we're also going to take this and add on the 50% retracement. So it's possible that we have a little bit of confluence there if we decide to go lower, and not quite to the 100 week moving average, but that rising pivot will be what we're eyeing, along with the 50% retracement from this low here, possible wave 1 and 2. Okay. On the MACD, starting to get into bear territory, but that lagging MACD line could use this zero line as a little bit of support. The RSI is down to 37. So again, when the RSI gets to this 30 and below area, that's a oversold condition. So it's possible that we could start our bounce there. So by the time we get to this area, if we're spiking down lower, maybe we hit that 100 day moving average or 100 week moving average. We spike under it, just like this, just like these spikes, and recover it. That will be a good indication that this has already gotten to the oversold area, that we're making a final reversal. And whether that's just a bounce or if that's the actual reversal to all-time highs, we'll have to see that day by day, week by week. Okay, let's go down to the daily. Daily trend is our friend. Now we have a little bit of Elliott wave analysis on the daily and the 65, so that's what we'll be looking at. Looking at traditional technical analysis, we have a downtrend. We continue that downtrend. We reversed again off of that off of the 8 EMA. And I don't believe I told you we have an evening star reversal pattern on the weekly. So let's check that out real quick. So we made our reversal, made it evening star, and reversed back to the downside. So that's important to know that we probably have lower prices ahead. It's a real bearish indicator. Okay, now this is this rising pivot is in its proper spot. Now, yes, we're so far away from those other points, it could adjust. I was trying to get it for this one to touch here. So yeah, it's missing these other ones. So it's more of a zone if I made a double line. So yeah, it could adjust up a little bit. And what the whole point is, though, is we want to look out for a little bit lower prices right into, if you notice these gap areas, we have a small gap here, a small gap here, plus a high, which indicates we have a couple points here where there's resistance, and we would suspect that we get at least a reaction for support. So if this, if these lines, if this rising pivot, if this 100%, if this was a W, we got this large move here. We have 100% extension from this X right here. So if this is a WXY, then that's the 100%. So it's just confluence, just putting out lines. We have the 50% retracement from that low that I showed there. We have gap areas, a rising pivot, all this confluence. That's where I think our next spot that we'll really look for a reversal point would be. Now, we haven't gotten there. We haven't broken lows. It's just, that's what we're looking at. Now, if you check out the, I'm going to get a little bit closer here. Now, if you check out the Elliott wave analysis, guys, I didn't see this. I can't imagine this happening very often. It doesn't. It's pretty rare where we have a W, X, Y, X, Z. It's a very complex correction. It's all obtained with 3 waves. 3 waves down, 3 waves up, 3 waves down, 3 waves up, and a final 3 waves down. So, I could have never predicted that to happen. If somebody did, good for them. That's just not a usual situation. So we had this W, X, Y, and I was with positive divergence, so that's why we played so aggressively to the upside. Now that we came back down, we haven't, again, crossed those lows yet. It's possible that we just actually triangulate sideways until breaking out. So we'll have to watch price action. But if we start, I'm actually going to play to the downside, and especially if we break the next geometric line below, then I think we come right back to here, and this would be a wonderful spot to try again to the upside. Okay, going down just a little bit further, you see we're triangulating in the RSI. I do believe we'll break down from this triangle here and then start our ascend up, faking all the bulls out that are getting it early, and break to the downside, and then trapping the bears and headed to the upside. Okay, going down to the 65. This is where we're going to end our video. Just want to get a closer look at what's happening. It's also coinciding with our expected move for the week. We have 144 points to the upside or downside. And what that does is that actually is the options market portraying where we might hit. So that 40-59 area, 40-60 area, that's right in confluence with everything else. And this rising pivot, I haven't moved that for months on end, for a very long time. That's one of them that I did not adjust earlier to see if it would work for here. So we haven't broke this geometric line yet. We have a gap area underneath. We'll see. We probably won't reverse on Monday. But this should, if we have the Elliott wave count correct, then this should be, if you notice, let me look first. We had this first move, the W, back up to 618. That's what happens when you have an ABC. ABC back up to 618. And then the same thing, ABC back to the 618, rejected off there. And now, let me fix that. Now in the smaller time frame, we're looking for, you have our 5-wave move down, our ABC up, and now a 1-2, and we should be looking for a 5-way series all the way down to around the 4,000 area to complete our mission there. Now that's 200 points away. It's not a small move, but it looks very small on these time frames because our waves have been so large. So get what you can from this. I'm going to trade this. I'm going to have some puts, especially if we get this cross. We're trying to cross there right now a little bit. And then one last thing. I know I said one last thing already, but the expected move, this is what's been happening. If we go to the expected move, we've been obeying these expected moves, coming down and then gapping down below, coming right back into the expected move area. This one consolidated, so it did not make it to the bottom, to the downside. And then we, as we made our next move, made it to the downside again. And so we're done consolidating, we're breaking down. So I do suspect that we'll at least come back and spike through this 40-60 area where the options expected move is again. So that's where we're going to target. If we do head up higher on Monday or Tuesday, look for the rejection from the 8 EMA or the 20, and then lower prices from there. So we're going to be bearish until proven otherwise, that this Elliott wave count is incorrect, and we'll base it off that. So thanks for watching, you guys. A little bit more bearish, but I think the end is near. It's 200 points away, so it's still a far shot, but this should be pretty aggressive, just like these C waves here. C is so aggressive. C, so aggressive. This is the C wave here, and it should be pretty aggressive. Okay? So thanks for joining us here at Option Center. Don't forget to like the video and hit that subscribe button. Have a good weekend.